Another conversation, as promised. We have Akshali Shah, who's the Executive Director at Parag Milk Foods, joining in. The company reported their numbers yesterday. The stock was higher in double digits. Over the last 1 year or so, the stock has doubled as well. Akshali, always a pleasure speaking with you. The obvious question, first half you've done revenues of almost, 14% in terms of growth. How much of that is sustainable? And if you could give us a sense on how your core categories are likely to grow, how your new business categories are likely to grow, and at what rate do you expect your liquid milk business to grow over the next 2 to 3 years?
Okay. So firstly, thank you so much, Mangalam, to have me here. It's actually been a milestone quarter for us. We've crossed the 1,000 crore revenue mark first time in a quarter, and we've grown by 16% year on year. And we've also grown in volumes by almost 10% in volume. Talking about the core categories, that is ghee, cheese, and paneer, the category itself is growing by double digits. If you can see that all the three categories are growing by around 20 to 25%. Plus, there's a major shift that is happening from an unorganized sector to an organized sector. And these are the categories which get impacted the most. This contribute to around 59% of our total revenue. In core categories itself, we've actually grown more than the company's average growth. We've grown by almost 23% this quarter. And in the near future, we see a similar kind of contribution coming in. You can see that there's been a slight jump in the contribution from core categories, but in the future, we see this contributing to around 60% of our total revenues coming from core categories.
What's interesting is the way your new businesses are growing as well, Pride of Cows as well as Avatar. I've consumed both of them, so I know that the products are gaining a fair amount of traction given the sort of organic milk that people are talking about and the rush for protein. Could you break up how much of your new business comes in from Avatar, how much of that comes in from Pride of Cows? How's that split, and at what rate is that likely to grow? What's the scale that we're looking at here?
Okay, so the new age business, both Avatar and Pride of Cows, are a little different than what we do in Parag, because we're going directly to consumers. And this Pride of Cows was almost a 10 years old brand, and we're the first ones to go direct to consumers. Both of these put together actually have grown by 79%, 80% this quarter, and contribute to around 9 to 10% to our top line. Moving forward, we see that the new age business will contribute to around 20% of our total revenue, plus the categories that we're getting into. So if you see that we've gotten into a protein snack category with the protein wafer bar. So and we have a huge lineup coming into the snacking piece. So we see a huge jump coming from there. Avatar itself, if you speak, has actually grown sixfolds in the last three H1s. If you see the past 3 years, H1s, we've actually grown sixfolds, and we're expecting a similar kind of growth in the next couple of years as well from Avatar.
Okay, so new businesses around 20% of your total sales. Actually, just wanted to get a sense in terms of the milk prices per litre, because it's stabilized at around 37 rupees for 2 quarters, and now it's moved up to around 38 odd rupees. What's driving it, and where do you expect the prices to probably be in the second half, or maybe how do you expect to exit FY26?
Yeah, you're correct. The commodity prices are, facing headwinds. If you compare it over last year, it's actually grown by almost 16% inflation. And even quarter on quarter, if you compare, the milk prices have gone up by 2%, as you mentioned. Now that the flush season is coming in, we're seeing these prices stabling and, will be stable as well in the next couple of quarters till the summers. We don't see a major price increase coming in.
Okay, also, what about margins then in the second half of the year? If prices start stabilizing or seeing a bit of a reduction there, where will your margins move in the second half of FY26, as well as with new age businesses over a period of time reaching that 20% contribution mark, right? Where will your margins move in the next couple of years as well?
Okay, so just to address, how the margins have grown. If you see, the margins have actually increased YOY. Also, you can see that, we've actually had a marginal good increase over the last quarter to this quarter. That is very, very clear. So from 26.5, from 25.4, we've gone to 26.5% in gross margins. So we'll be on a similar lines, probably a marginal increase that we'll see there because due to better product mix and also operational efficiencies. So you'll see a higher gross margin in the next couple of quarters. And we've also given saying that given the new age business and all of that, we see our EBITDA being in early teens in the next 3 to 4 years.
Early teens EBITDA in the next 3 to 4 years, that is something that the street would really like, because right now in the second quarter you were just about 7%. Just a final question before we let you go, Akshali. While there is underlying demand, you're not the only game in town, right? There are a lot of other players. In fact, the large cooperatives, the likes of Amul, etc., are amping up their product innovation and offerings in the protein space as well. What makes you confident about your strategy gaining market share here? And very shortly we will get, Milky Mist as well. They've gotten an approval from the regulators for an IPO. So not only will you have to fight for market share in the marketplace, but also investor share. So to that extent, what makes you confident about the company's growth path?
Okay, first of all, what really makes Parag very different is the completely integrated business model. We're the company which has our own farm, our own processing unit, our own procurement. We process our own whey protein, and we're the only ones in India processing whey protein right now, which is isolate and concentrate. So this has actually given us the first mover advantage. And now that we're moving on to even probably a value-added production in whey protein with our snack category, which will actually help us in gaining the market share. And we've already had a good response of that. And we see this being an added, saying that we have the first mover advantage in the sports nutrition category. And now, if the awareness of protein is also growing. Talking about, it'll be very difficult to comment on talking about on the streets of how we are going to share, how is going to be the share.
All right.
But talking about the market scenario, there's the huge demand. There is the dairy segment is growing by 6 to 7% every year. And from unorganized to organized, that's also rapid. So we see great coming in from there.
All right, actually, we're going to have to wrap up on that note. Thanks very much for joining in and speaking with us. So that's Parag Milk. The stock is up around 3%. Just want to move forward and talk about Zydus Life, because they did make an announcement just a couple of minutes ago. Interestingly, they've entered into the robotics segment. This is obviously the robotic surgical segment, where they have received, or the company that they've tied up with has received the CE mark approval for their robotic surgical system called Andy. So Zydus Life is in focus on account of that. Interesting diversion for Zydus Life, considering that they are getting into the medical equipment space with this particular move. And the CE mark is basically a compliance mark from the European regulators. Well, on that note, we need to wrap up on the show. Thanks very much for watching.